Hi, this is Gradle from Elevate Care Insights, and today we're going to look at the top strategies for pricing living care to maximise profits. So let's start with context and current trends. In the dynamic field of living care, understanding and adapting to current market rates is crucial for care agencies. As of 2023, the landscape of living care pricing in the UK is characterised by significant variability. The average cost hovers around £950 per week, but this figure can range from as low as £650 to as high as £2,000 weekly, depending on several factors. This variability isn't arbitrary. It's influenced by a complex interplay of factors such as the intensity of care needed and the location of the service and the specific requirements of clients. Geographical location plays a pivotal role in pricing. For instance, care services in London and the south of England are typically priced higher than those in the north or Scotland. This disparity is often attributed to the higher living and operational costs in the southern regions. An agency operating in London might therefore have to set its base rate at around £1,200 per week, while a similar agency in the north might offer the same level of care at around £800 per week. Both agencies need to justify their pricing to their clientele based on regional economical factors, cost of living, and the availability of skilled caregivers. The demand for specialised care services also influences pricing. Services tailored for individuals with advanced medical needs such as dementia or palliative care or mobility issues command a premium due to the specialised training and experience required of the caregivers. In this context, an agency providing specialised dementia care might charge £1,500 per week, acknowledging the extra training, skills and attention required for such care. Given the complex needs of dementia patients, which might include managing challenging behaviour, providing around-the-clock supervision, and employing specialised communication techniques, the pricing of £1,500 per week reflects enhanced training of their staff, complexity of care, and additional resources allocated for such clients. It's essential for agencies to continually conduct market research and benchmarking exercises. Understanding what competitors offer and at what price points can help agencies position themselves effectively in the market. For instance, if most competitors in a region offer live-in care at around £1,000 per week, an agency pricing its services significantly higher needs to clearly communicate the added value it provides to justify the premium. Agencies must be agile in responding to economic changes. Factors like inflation, cost of living adjustments, and changes in minimum wage legislation directly impact operational costs and, consequently, pricing strategies. Regularly updating pricing to reflect these changes is crucial for financial sustainability while maintaining fairness and transparency with clients. The regulatory status of an agency can also influence its pricing. Agencies regulated by bodies such as Care Quality Commission, CQC, often incur additional costs related to compliance, quality assurance and staff training. These costs are typically reflected in their pricing structure. Being CQC regulated is a mark of quality and reliability which can justify higher needs, and in fact, no care agency offering personalised care can operate legally without being regulated by CQC. The pricing structure also varies depending on whether the care is for an individual or a couple. For couples who both require care, agencies often provide a more cost-effective solution compared to two separate placements in a care home. One caregiver can often meet the needs of both individuals, leading to economies of scale. A primary aspect of the cost structure also involves differentiating between daytime and nighttime care. Daytime care, typically spanning from early morning to late evening, is the standard service offered. However, nighttime care, which may involve staying alert to attend to the client's needs, often incurs additional costs due to the unsociable hours and the potential requirement for a more intensive monitoring. Consider an agency which charges £900 per week for standard daytime care, but increases the rate to £1,200 for services that include nighttime supervision. This differential pricing accounts for the additional demands placed on caregivers during night hours. Weekend care often carries a premium over weekday care. The rationale behind this is the limited availability of caregivers and the additional compensation typically required for weekend work. This distinction in pricing ensures that agencies can adequately staff their services throughout the week, including times when caregivers are less readily available. Bank holidays and other special occasions can also impact pricing. Caregivers working on these days often receive higher pay, reflecting the premium nature of working on public holidays. Agencies need to factor in these increased costs when setting their pricing structures for care during these periods. A care agency may offer its services at a standard rate, but increase charges by 20% for bank holidays, recognising the additional compensation required for staff working on these days. The cost structure isn't solely about caregiving wages. Agencies must account for overheads such as administrative costs, training, insurance and compliance with CQC. These indirect costs form an essential part of the pricing model, ensuring that agencies can sustainably offer high quality care. Customisation of care packages is another aspect that impacts cost structure. Agencies must be flexible in their pricing, offering tiered services based on the level of care and support required. This approach ensures clients only pay for the services they need, enhancing affordability and value. In the live-in care sector, the choice of employment model significantly impacts the operational dynamics, service quality and pricing strategies of care agencies. These models range from using agency-employed caregivers to engaging self-employed carers, each with their own implications. In the agency-employed model, caregivers are directly employed by the care agency. This approach offers greater control over service quality, as the agency is responsible for training, scheduling and managing the caregivers. In the self-employed carer model, introductory agency, the agency acts as an intermediary, introducing self-employed caregivers to clients. The agency does not directly employ the caregivers, but may assist in vetting and matching them with clients. Some agencies offer a hybrid approach, combining elements of both direct employment and independent caregivers. This model offers a balance of control, flexibility and cost efficiency. The choice of employment model in live-in care significantly impacts how agencies operate, the quality of care they provide, and their pricing strategy. Each model has its strengths and challenges, and the choice often depends on the agency's business philosophy, target market, and operational preferences. Understanding these critical issues are important for you to make an informed decision about how you align your business goals and your clients' needs. Your pricing structure should reflect the complexities of service delivery, including time-based variations, additional charges for special occasions, staffing costs, staff training, paying yourself as the owner, indirect costs of running your care services, and ensuring quality compliance. By carefully balancing these elements, you can create a pricing model that is fair, transparent, and aligned with your clients and your needs, thereby fostering trust and long-term relationships, which is what is essential for a care agency. Please comment below and like, subscribe and hit the notification button.